All right, what's up, folks? This is Faris Sleem with Trade with Tex. Today we're going to be talking a lot about the Trade with Tex membership, right? Whether it's a free trial or the paid monthly subscription that you've signed up for, and also how to lay the groundwork to become a successful day trader and swing trader. So this isn't just a video for those of you that have signed up for the site, but it's also a video for anybody who is looking to create a system to trade actively. And then build off of that to become the best trader possible. Okay. Now, to be clear, this is an introductory video. It's made for beginners. I know some of the stuff is still going to come off as advanced, but if you've spent a day in the chat room and you're new to it, you've probably seen a lot of the same things where we're talking about fibs and pivot points and reclaims and back tests, and all of these words just sound like a bunch of crap, right? The idea is, though, if I can get you up to speed a little bit and cut down that learning curve a little bit, then things will be a lot easier, because truth be told, what we're doing might be advanced, but a lot of why we make the money that we do and why we trade so consistently is because we keep things simple. Okay. So my goal for you guys is to create a simple groundwork for you to become a good trader. Okay. And that's what we're going to talk about in this video. So basically, you've signed up with Trade with Tex, or you are just learning about it on YouTube or whatever, and you want to become a technical trader. Now, first things first, and for me, I'm a visual learner, and I need to have a list written out as well in order to actually take concrete steps. So I'm going to give you a few things that you need to be doing as a trader. Okay? Now, to be clear, this is not a hobby. Okay, some of you guys might think of this as a hobby, but for me, it's a job. For a lot of people in the chat room, it's a job. And your goal ultimately is either to create enough income to have more free time, right? Do something that you like, or, bottom line, make some money. So if you want to do that, you really can't treat trading as a job, right? So first things first, you can already tell that right off the bat, I'm calling this as, your job as a trader. This isn't something that you're doing in your free time for fun. It might start off as that, but if you want to create an actual source of income, you have to treat it like that, right? Get up on time, do your chart prep, etc., etc. Okay. But the three things that you're always actively going to be doing, because I think the times where I stall out the most and fall victim to a routine are where I'm not actively doing something. So you always want to be learning. That's the goal. And this is something that is not only for new guys. Let me be clear. This video might be mainly targeted for new guys to learn as much as they can. But myself, personally, I never pretend to know everything, right? I think that will significantly restrict how fast you learn. And you've always heard people talk about this, whether it's about you or somebody else, saying that, trader XYZ or, my brother, this and that, is a very fast learner. That's usually just because people have a mental block thinking that they know stuff that they don't, right? So if I see a stock moving up for the day and I think it's because, the president said something about that stock, or because somebody on CNBC said something about the stock, but I don't definitively know why it's moving, I don't pretend to know. And that kind of mindset is very constructive to being a successful trader. Okay, so not only constantly learning and trying to learn in your own time, but asking questions when you don't know what's right or wrong. Okay, and if somebody has a different point of view, ask them why they got to that point, right? Ask them. Don't automatically assume that you're right and they're wrong. These markets will humble you. Okay, you have to keep learning on a regular basis. The other two things that I have on this list, and this is really something that I try to push in the chat, you have to participate actively, and I'll go over the chat room later on in this video. So there's no, I watched the intro, I learned a couple of things. No, you have to watch the whole video through. We'll go over the chat later, but you have to participate actively. And a really silly example of this is that, we have a trader in chat, Ali, okay? And obviously this video is going to be out for years and years and years, but we had a trader in chat that was new about a year ago, Ali, and he was asking a lot of questions. He was making some jokes here or there. And even though his analysis wasn't that useful right off the bat, now, arguably, he's one of the most invaluable traders in chat to me because he showed up every day and because he asked questions. And in reality, you can miss the trading day, right? You can miss a trading week because everybody's got, their own lives. But showing up every day as much as you can, whether it's 30 minutes, an hour, goes a very long way, okay? And making your presence known, okay? Last thing is thinking independently. This sounds like a very generic list here, right? You always have to be learning, you always have to participate, but these are kind of the pillars of the successful traders in the chat. And thinking independently is a big one because alert chat rooms don't really work, right? Like if I'm telling you to buy a stock and you buy it and it goes up, you make money, yay, that's great. But what happens when I'm sick for a week, right? What happens if I have a bad week? What happens if I start trading something completely different from what you're used to trading? That's a problem. So our goal is not for you to become profitable. To be honest, I could care less if you become profitable. What I care about is you being an independent thinker and learning how to do this on your own, and then the profits come with time. Because I know if I teach you the ropes, right? If I show you the ropes and I teach you exactly what our strategies are, you have a much better chance of making money than if I were to just tell you to buy and sell here or there. Now, we do put alerts in the chat, but I encourage you to think independently and trade on your own based off the information that we're giving you. Okay? So that's my spiel for the first few minutes there, as your job as a trader, what you always have to actively be doing. Now, let's get into the actual basics here and start talking about some of the concrete things you can do on a regular daily basis. Okay? First things first, I said this briefly, but your goal is to always focus on the process. So the process, in order, is you scan and research for a watch list, right? And this is actually a good tip I'll give you guys real quick. When you're first starting out, you want to focus on 1 to 3 tickers max. You'll see that we're bouncing around a lot in chat, but one of the worst things that you can do, especially if you're like me and you have attention issues, like I can't focus on certain things without losing focus on others, right? I'm a human being. So if you're like that, 1 to 3 stocks, and even 1 is nothing to be ashamed of. Focus on a smaller list, okay? Now, prioritizing the watch list is a different video entirely, right? We have tons of webinars on it. But bottom line is, right when you've selected those tickers, whether they're stocks or futures, okay, you annotate the charts. So let's say I'm watching, Tesla and gold, right? Let's get a little bit of diversity on this watch list. So gold, the commodity futures, if you don't know what that is, we'll go over it later. But these are the 2 tickers. Let's say I'm watching them pre-market before the bell rings at 9:30 a.m. Eastern time. I need to have those charts fully drawn up, meaning I need to have the support and resistance levels drawn up. I need to have everything possible annotated on that chart so that I'm fully prepared, so that when I'm in the trade, right, and I'm thinking, oh, this thing's going to the moon, I nailed the entry point, I bought a bunch of shares of Tesla. Bottom line is, if I don't have all my key levels drawn up, I'm putting myself in a tough spot, right? I won't be able to trade as best as I can, okay? So you annotate those charts, and then this is the big aspect of what your job is as a trader. You wait. And a lot of people misinterpret the patience factor in trading, meaning that if I tell you to be patient, you naturally think, well, that means I just need to hold my shares longer, right? I need to buy into a position and be patient for my target to hit, right? For the price that I want to sell at. That's not necessarily true. While that is true in some instances, a lot of times for trading, you have to go into the day thinking that you don't have to trade, right? I don't need to make money today if there aren't setups, because the way it's spread out, and you're going to learn this over time, this is where expertise and experience really comes in handy. The way it's spread out, let's say we have Monday, Tuesday, Wednesday, Thursday, and actually this is not the best background to write on. Monday, Tuesday, Wednesday, Thursday, Friday, right? Last week, to give you an idea, Monday and Tuesday, okay days, right? I probably took, and I'm a very active trader, right? But I probably took like 6 trades each one of those days. Wednesday, I took 10 trades, right? And I'm just going off of memory here, but roughly, okay? Wednesday, I took 10 trades. Thursday, I took 2. Friday, I took 4. Look at the difference there, right? Look at the difference. And that's not saying that I over traded on some days or I under traded on others. But what that shows me is that there is a very big variety of opportunity out there. So if I'm trading super actively on a day where not much is moving, I'm going to be humbled by the markets and I'm going to get my ass kicked, right? That's the bottom line. Because if I'm not waiting for my setup for the chart pattern that I want to see, then I'm just trading to trade and nothing good comes of that. Okay, this market is designed to take your money. So all you got to do is wait for your setup and capitalize on it. All right. And a very basic aspect of this is, let's say that I only like to trend trade. That's my style. That's what I'm comfortable with. And I look for a basic trend setup where it puts in a low like that and I get in right after and then I sell into strength. Okay. I sell into strength. So let's say, stock XYZ is trading at $50. I get in at 51. It spikes up and I sell at 54, right? That's my strategy. If I'm waiting for that strategy on a daily basis and I only see it once or twice, that's fine, as long as I capitalize on those 1 to 2 moves and I don't trade when the trend looks like this. Okay, that's not the setup that I'm looking for. So basics, right? If I'm a trend trader, I'm going to look for trend patterns. If I'm not, why am I trading that? Okay, so the advice there is to stay in your lane. And the last part of it is to create a game plan and stick to it. Throughout your trading career, you will have a lot of obstacles. As you've probably heard or read in books, your biggest obstacle is yourself, right? The mental aspect of this is not kind. And to be honest, if you can't improve by reflecting on your trades and by seeing where you went right and wrong and just have some self-awareness, then you won't be able to make it. I'll tell you right now, that's the breaking point right there. If you cannot improve regularly and say, hey, I was wrong, I was right, I was wrong, I was right, then you won't be able to make it. So by creating a game plan and sticking to it, you are holding yourself accountable, and the majority of your mistakes are going to be identified here. Like if I'm reviewing my trades for the day and, I traded stock XYZ from 51 to 54, like I said, right? But the buy signal was at 50, then obviously there's some room for improvement there. And mainly what you're looking at for your game plan is, what's my setup? Did I trade it? And if I did, what was my risk? What was my reward? Now, this might sound like a bunch of craziness or the ramblings of a crazy man to you guys, but bottom line, what this means is that when I get in, I have a certain dollar amount that I'm putting at risk, right? If the stock drops or if the futures ticker drops, X percent or X dollar amount, then I have to get out to avoid a bigger loss. That's how you manage your risk, okay? And in terms of reward, I'm saying what move up would be sufficient for me to take my profits, right? What move up would be sufficient for me to get out? So this game plan, as simple as that, holds you fully accountable. That's the bottom line, okay? If you stick to it, then you'll be fine in the long run. If you find yourself not being able to really stay consistent, then something's wrong with your process. Something's wrong with the setups that you're taking, the way you're identifying tickers, and that is something that you can fix, okay? And the last thing I'll say for this part of the video here is really just one of my favorite quotes, and it's from Bruce Lee, the man, the myth, the legend. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. You don't need to trade every stock. You don't need to trade what's hot, what's on CNBC, what your friend is telling you about. You just need to trade what you're comfortable with and what you're good at. So, for example, let's relate this back to sports. It's this simple. If I'm good at shooting three-pointers in basketball, right, and I can't dunk, why am I trying to dunk? Right? It doesn't make any sense. So it's the same thing with trading. If I'm good at trend trading, but I'm not good at reversal trading, then why am I trying to nail a bottom? Why am I trying to nail a top? Okay? Now, let's keep it moving forward. This is the process that you need to be actively building towards. It doesn't get molded in a day. It gets molded over the course of years. So you have to be working on it on a regular basis. Mine is always changing. Mine is always improving. And that should be your goal too. Okay. Now, I told you we were going to talk about the actual basics. So let's get into the fun stuff. Volume and price. So we've talked a lot about the mental aspect and what you need to be doing actively, what your job is as a trader, but volume and price are two things that we look at that really kind of simplify everything we look at, in the sense that, some of you guys are probably familiar with this, right? But we are looking at price and volume just displayed in a different way. That's really all we're doing, right? We're using math to display these things in a different way to give us buy and sell signals, right? So we have our standard charts, and I'll go over those a little bit later. But what these charts are plotting to us, right? We typically have price, overhead, and I'll actually fast forward to a more complex chart here for a second. We have price, overhead, and this looks crazy, but don't worry, it'll make sense shortly. And then volume below. Volume is telling us the number of shares that are being traded. So naturally, if you want to get in and out of something easily, you want volume to be high. Okay? For price, obviously, if you buy into something, you want it to go up. If you short something, you want it to go down. We're not going to go over shorting too extensively right now because that can be confusing for some people, but it's essentially just borrowing shares and betting against the stock price. So if the stock goes down, you make money. Okay? But if you buy something, if you go long, that's another word for it that we use commonly in chat. If you go long and it goes up, you bank. If you go short and it goes down, you bank. Now, for price, we display our price with candlesticks. Okay? With candlesticks. And I'll go over the Candlesticks Basics in just a second. For volume, it's very easy to display it. Almost all the charts that you have just right off the bat will have it up. But basically what you're always looking for volume is a read on relative volume. Okay? Which is basically saying, so this is a visual representation, right, of how much volume is flowing through. Obviously, you can see earlier in the day for this stock, not that much volume was coming in, versus later in the day, we had very high volume. Okay? That's what you want to be looking for, these kinds of volume patterns for getting in and getting out. Okay? That's basically what you're looking for. Now, one thing I have to say, these are indicators on the chart that tell us when to buy and when to sell, but when you're looking at volume, a lot of people think that it's just myself, a couple of mom and pops at home, a couple of friends, et cetera, that are trading the stock. But in reality, 60% of the volume, and this was, a study that was conducted a couple years ago, but it's definitely still true to this day. On average, 60% of the volume that you're seeing flowing through stocks are all computer traders. They are all algorithms. And whether it's institutional investors or retail investors running algos, these have very basic codes that are constantly changing, right, to maintain a market edge in order to make money. And you're always kind of blaming the markets when you take a loss when you first start trading. You're saying, well, I got faked out there. Or, that news hit and I was in the trade. Let me start off by saying this. You're fully accountable for every decision that you make. So if you're even just buying and holding a stock, you're accepting the risk that something random could happen and screw you over, right? And for algos, you can't blame them. A lot of people like to blame algos and say, well, my stop hit because the algos saw my stop there and yada, yada, yada. These are computer programs. They don't care about what you're doing. The markets don't care about your opinion, right? So you just have to trade your plan. And at the end of the day, when we're looking at volume, algo volume, so just consistently high volume, is usually pretty beneficial. That's really when we start to hit some home run days, okay? So you really want to focus on relative volume and tickers that have consistently high volume, okay? Especially when you're starting out so you don't get stuck in anything. Now, real quick, I do want to say that with regards to algos, some of you guys probably have tested them out in the past or you've heard of them. We're focusing on being a day trader yourself independently, where you're physically going in and clicking things. Yes, there is some money to be made in algos, but your goal is to become a day trader or a swing trader yourself. Okay, so even though that is appealing, that's not the point of this video. All right. Now, for price, this pretty much determines everything that we do, right? Volume will help us make a couple of different decisions than we normally would, but price is everything. I'll say that again. Price is everything. The markets do not care what you think about Tesla. The markets do not care what you think about Elon Musk. Price should determine your trades, not bias. Okay? I'm going to let that sink in for a second because you are going to get smacked around every single time you let a little bit of bias sneak through, a little bit of emotion, and you don't focus on price. Okay? This means that when a stock starts going against you, you exit, right? Based off your game plan, but you exit. This also means that you are going to focus on trend and key levels. Those are the two big things that we look at. So this is kind of basic geometry from back in the day, or algebra, or whatever you want to call it. I guess technically algebra, but with the trend, a lot of times, the times where we really hit home runs throughout the day are not when we buy a stock low and sell it very high. It's usually when we have a stock that's trending like this repeatedly throughout the day, and we just keep buying and selling and buying and selling and buying and selling and buying and selling. Those are the home run days for me. It's not that you bought and you nailed the top later, right? It's that you spot your setup and you just keep capitalizing over and over. So the trend, right? Ideally, you're playing trends that are stronger, so they have a larger rise over run. Okay, you're playing trends that are stronger, but this is your friend all the time. You want to avoid fighting it unless it's off of a very big key level. Now, key levels are a huge part of what we do in the Trade with Text chat. We use a combination of Fibonacci retracements. What the hell is he talking about? We use a combination of pivot points. What the hell is he talking about? I know that's what's going through your mind, but you will learn these things. And you use those key levels as areas to take profits and areas to exit, and really just to get something of significance from the stock. So if I have a very big support level at $50 for stock XYZ, and it's dropping down, and I can see it bouncing off of it, I can get in at 50.2, okay? And then I can sell at the next key level of 52, right? And there I've banked in $1.80 per share of profits. Okay, that's the idea. So we use these key levels not only for trades, but also as inflection points, right? Which is a fancy way of saying areas where a stock can reverse, right? So if I am riding a trend trade for stock XYZ that I bought at 50, okay, and it's moving up, it's moving up, it's moving up, and I know there's a big key level up here at $60, right? Then I'm going to put a sell order in right in front of $60 to take my profits. And even if it does keep going, but more than likely it's going to reverse off that, okay? Even if it does keep going, I created a game plan, I traded my setup, and I used this key level as a resistance level. What is a really good tip that I wish I was told earlier in my trading career, think of key levels as zones when you start learning them. Like, you're not always going to have a stock bouncing exactly off that key level. Like if I have a big supporting moving average or a big supporting historical level at $50, right? It's usually going to go down a little bit and then reclaim before it starts bouncing, right? You're not going to get it exactly off of 50 every time. And even though there are a lot of instances where you're reminded of this and you say, hey, it hit $50 down to the cent. My technicals were perfect. Even though that's the case, this is a matter of supply and demand, right? So $50 is showing demand. There are buyers under that level, right? So we're not going to bounce exactly off of 50, but it's saying that under 50, people are willing to buy this stock. So there is demand. Above 60, let's say that's resistance, people want to sell this stock. That is supply. And that's a good transition into the Candlestick Basics here. Okay, Candlestick Basics, let's just go over this. This is what we use to plot out our price. So you can see it on this chart that we talked about earlier, where we have, for example, just a standard candlestick right here, right? What this is telling me, since it's green, is that the stock went up for the next candlestick, and this represents an interval, right? A time interval. So the typical charts that you're seeing are going to be daily charts or hourly charts. What we're referring to with this is the 1 year, 1 day time frame, and the, well, it depends on what people are typically using, but what we use is the 20 day, 1 hour time frame. And the second time frame right there is the second number there is the interval that we're looking at. So we're looking at this chart over the course of 1 year. Each candle represents 1 day. That's the daily chart. We're looking at this chart over the course of 20 days. Each candle represents 1 hour. In this example that I have, this is just an intraday chart, what's happening during the day, and this is the 5 minute. We keep these up a lot, especially early on in the day for faster moving stocks. So what this is telling me is today's time frame, and then each one of these represents 5 minutes, what has happened during that 5 minute period. Okay, so in this case, stock price went down for 5 minutes, then it went up for 5 minutes, up again 5 minutes, up again 5 minutes, down for 5 minutes. Okay, now that being said, for green candlesticks, the top of the body, right, this thick body is the close. Okay, the top is the close. The bottom is the open. And for red, it's the opposite. Okay, so if a stock is dropping like this, and let's actually put it in red. What this is telling me is that this is where it opened for that 5 minute period. This is where it closed. This is where it opened. This is where it closed. For basic price analysis, your goal is to always focus on the close. Okay, it's to always focus on the closing price, because if I'm looking to play a breakout, right? If I think Amazon has very heavy resistance at $3,000 and it is jumping up to that resistance and it closes a candle that looks like this, we know that the top of the body is the close, so it's breaking that resistance. Now, if it closes a green candle, right, but it closes under the resistance, that is still being rejected at that key level. Okay, that is still being rejected. So it's very tricky, because you would naturally think that a green candle is bullish. That is not always the case. Okay, because the closing price is what matters in relation to the key levels that we're looking at. Now, the other two components here are the upper and the lower shadow. Basically, a big lower shadow shows us that there was buying pressure, that there's demand. A big upper shadow shows us that there's sell pressure. So just like for Amazon, what I was saying, if we have that hypothetical level at 3,000 and it forms a candlestick that looks like this, okay, usually without that many curves in the line. Let me draw that a little bit better. So we got 3,000 and it forms a candlestick that looks like that with that upper shadow and just a tiny lower shadow, barely any buyers, right? A ton of sellers, and it closed out red. So bears win that candlestick, they win that fight. It's likely going to reverse from then on out. Okay, so the bigger the upper shadow, the more sell pressure there is. That's a red flag. The bigger the lower shadow, the more buying pressure there is. Ideally, you are using these off of key levels. If not, you're usually over-interpreting. Okay. Now, let's go over a trade example just to kind of put this in action so we can start clicking for you guys. And again, if at any point you don't understand something, pause it, Google it, or email and ask me, or ask in chat. Just make sure you ask the question instead of not understanding it and spending 3 hours trying to beat around the bush here, right? Because we're skimming over a lot of very important topics that we could have 30-minute webinars on each one. But bottom line is, you have to learn one thing at a time. Okay, so this is an example from a trade from today, and actually this stock is popping back up right now. Basically, this is a momentum stock. It trades at $37 per share, right? So for every one share I buy, I have to spend $37, okay? The idea is that for this stock, I wanted to play a breakout, okay? We have all the indicators on this chart. It looks really overwhelming, I'm sure, for some of you guys. But bottom line is we want to focus on price and volume. Now, this is the huge resistance. I'll tell you right now. That's the huge resistance. That's the prior 52-week high. And although this isn't the best example because we're not always playing 52-week high breakouts, that is still going to play a big role in the price action. So if SHLL, that's the ticker, and that's where you type it in to the TD Thinkorswim platform, okay, or whatever platform you're using, if SHLL breaks above 34.67, then I can buy it and play it up to the next target, right? I can buy it, hold it, wait for the target to hit, and sell. Now, my game plan is pretty simple, right? My game plan is to get in when it breaks here and then sell it at this pivot point. That's a resistance level, okay? As you can see, that game plan played out pretty well. However, the other thing I want to show you is not just price, but volume. Look how low volume was up until this point. And if you're wondering how to set up your chart like this, by the way, we have a getting started guide on the site that walks you through adding these indicators. So you can look at the same thing that we're looking at. But basically, broke above, that's where relative volume came in. You can see the techs working their magic, right? That's where sellers were trapped, buyers took control, okay? And notice that we closed above the key level. See that top of the body there? Barely closed above the key level, but it was just enough to push it into the next leg. I waited for a little bit of a pullback, which doesn't always work in my favor, but it did. So I waited for a little pullback, right? You can see one of the other levels we use as support. It's a moving average, so it trails the price. See how it reacted positively to it? I bought right after that at 36. My target, 38.16. And just so that I can have a game plan here in terms of managing risk, let's say if it drops back below 34.67, I'll sell it for a loss. Okay? So to kind of simplify this, my max risk is about $1.30 per share. My max reward is about a $2.16, right? Let's say $2.20. I'd say that's sufficient risk to reward to get in. I like that game plan. So I took the trade, point A to point B. I actually ended up selling 38.49 because it spiked through the resistance. Okay. And I think I banked about $700-800 on that trade. It's not anything to write home about. Some of you guys might be saying, oh, $700-800, that'll buy me food for 10 years because you're eating ramen. Some of you, that's probably nothing. But bottom line is, I waited for my setup, I took it, and it paid off. Okay? That's where you can see the relative volume and the price, closing price, increased relative volume working together. Okay? Now, again, this might sound like just complete mumbo jumbo to you, but it is the basics of what we do on a daily basis in the chat. So in the chat room at this point, I would say, hey, Shell is breaking out, right? SHLL breaking out. And I put the ticker all in caps, by the way, when I'm typing it in chat. SHLL breaking out above 34.67. My first target is this. I went long. I bought it, right? Long equals buying. XYZ shares at this price, and that's where I go in. If you are an independent thinker, you might actually have a better entry than me. You might be in at 35. You might hold it for a longer period and look for a move higher. Okay? But if you are just chasing the alerts, you'll get in at 36.8, get out at 37.2. Your gains are a lot worse. Okay, so try to think independently there. Also, last thing I'll say for this chart, look at that ugly candlestick, right? Big upper shadow. You can see a lot of sell pressure, and look what happened after. Right, pulled back. Okay, now let's get into a couple more things to wrap this up. There are 3 things that we trade pretty actively in the chat room, one of which you're probably already familiar with, stocks, right? A stock is just a way for you to publicly trade a company's value, right? That's a good way of thinking about it. So a company issues XYZ number of shares, you get to buy some of those shares, and if the market value, not the book value, if what people perceive to be the market value increases and you've bought it, then you can sell at a better price and realize those gains. So for example, 10 shares of Apple. And again, I know everybody knows that, but I got to cover it. Futures and stock options, a lot more exciting. Futures are make-believe. They are contracts that are formed just so that you can trade an underlying asset. So basically, I think the best example of this, the S&P 500 is an index, right? This is just an index of 500 big companies, okay? Now, the way this works is that this one has equal weighting, right? For the most, not equal weighting across the board, but it doesn't trade like the Dow. So if, the top 10 holdings of the S&P 500, Amazon, Apple, whatever, move up, then the S&P 500 will move up with it. But if I want to trade the S&P 500, which usually ranges pretty well, or even oil during an inventory report, or during, just a crazy Saudi Arabia headline that is fluctuating like a madman. If I want to trade these things, I can buy a fake contract, essentially a futures contract, right? And if it goes up in value, I can sell it and make money. This is a big portion of the money that I make. Stocks don't always come in play. So if you want to be flexible, these are two things that I would focus on. Honestly, if you're new, I think futures are easier to focus on. It's less tickers. It's a shorter watch list. Very easy to follow them on a regular basis. So I would actually advise that you guys start out with futures, but they're not as fun, as exciting. So people usually gravitate towards stocks and options. Okay. But basically you're trading, one contract of gold, right? You're trading the value of gold. You're not actually buying and selling gold bars themselves, right? If you do buy the contract and you hold it past the expiration, okay, we're not going to go into the details of that, you can actually receive delivery of a bunch of barrels of crude oil or a ton of gold. But 99% of the time, your brokerage is going to force liquidate you, so that doesn't happen. But in some instances, it can. Just be aware of that. Know what you're doing when you're trading these. Okay, these are also taxed differently. Now for options, this is very, very confusing. I would actually recommend you guys stay away from these. If you really, really want to get into them, please be sure not to trade them with a lot of size. Okay, options. Let's say that I don't want to buy Amazon common stock that's trading at $3,000 a share, and I'm making a bet. Well, let's say Amazon's trading at 2,800, and I think Amazon's going to be trading above 3,000 by the upcoming Friday, and it's Monday. I can buy multiple contracts of call options, right? There are calls and puts. Calls you bank if it goes up, puts you bank if it goes down. It's just like buying and shorting, right? I can buy call options that if Amazon goes above $3,000, I get a much larger payout, okay? It's a good alternative to actually paying $3,000 per share, because normally these options are going to trade at $10 a contract, okay? And on that move from 2,800 to 3,000, these $10 a contract can go up to $60 a contract. So a 500% gain, right? That's why people gravitate towards stock options. However, you can get crushed trading them because they are very advanced. You don't know what expiration to pick. You don't know what strike price to pick, etc., etc. If you want to get into these, I highly recommend buying the Options Playbook, 2nd edition. Really good for visual learners, really good at just simplifying how options work. Honestly, I still pull it out to this day and use it for different spreads and whatnot. So for futures, use chat. For stocks, use chat. For stock options, buy the Options Playbook. It's like $20. Don't be cheap. Okay. Now, last thing is, I told you guys at the start, that you should actively be participating, learning, thinking independently. Those are things that you need to do to become a successful trader, right? But what I typically need in order to actually get things done, I need a list. So the first steps that you're going to take after this video, get your chart set up, right? Don't be a bum. Get your chart set up. It does not take more than 30 to an hour. Even if you don't understand all the indicators, add them one at a time, okay, based off that getting started guide on the website. And that should give you a better idea as to what we're referring to intraday, okay? I also highly recommend, if you don't know how moving averages work, look them up. If you don't know how the VWAP works, look them up. If you don't know how Fibonacci retracements work, look them up and learn one thing at a time. Okay, that's a good transition to the next point here. Learn one strategy, right? You're also learning one indicator at a time, but as you move along, you want to learn one strategy at a time. So, for example, we have range breakouts, range reversals, trend setups. So we talked about it earlier. If a stock is trending up like this, and I'm buying right after that swing low comes in, right? I buy there, I sell into strength. That's a setup that's easy to spot. It happens multiple times for the same ticker in one day, and you can really milk these setups over and over, right? The other aspect of it that I mentioned briefly, I really think it's helpful to learn range. I didn't learn this until later in my trading career, and basically what this is saying is that if a stock is just bouncing between $50 and $60 per share, okay, the ideal play here would be to play a breakout, right? When it breaks out above 60, you get in and you ride the wave, okay? While that is great, most of the plays that we get that are a little more boring but a lot more profitable are reversals, right? Meaning that if it's bouncing between 50 and 60, a lot of times it's best to buy it off 50 and sell it at 60, right? And just do that over and over, because the breakout could bring us a huge move. It could, but let's say it just goes to 65. I could have made 10 bucks over and over instead of this $5 by just playing the range reversals over and over and over. Okay, so range breakouts are great, range reversals are great, trend setups are great. Just pick one and master it and then move on to something else. Okay. Other thing is practice risk management. After you start becoming a really good trader, which some of you will obviously be quicker than others, risk management is like 90% of your job, because you know the setup, you waited for it, you capitalized on it. All you got to do is make sure that you're not taking any big losses, right? Out of this list, small win, big win, small loss, big loss. There's only one thing you got to avoid, and it sounds so simple, but if you break your rules that you define, you will take a big loss, and you have to avoid that at all costs, because even if you have smaller losses, your portfolio is never really going to take a beating, right? The markets will always be there tomorrow. If you missed a trade or if you didn't trade it well, just make sure that you are managing risk so that you are able to trade tomorrow. Okay, so you don't blow up your account. I blew up 2 accounts when I first started trading, and I'd like to consider myself, at least a somewhat bright person. I'm not as dull as some people make me out to be. So that being said, if I blew up 2 and you know less than I knew when I started, you got to play your cards right. Manage your risk. Okay? And then the second to last thing here is to paper trade. Paper trading is fake trading, but it is practice. If I don't know how to shoot a 3, why the hell am I taking a 3-pointer in a real game with everything on the line? Okay? It's the same thing as lifting weights. You don't go into the gym and start bench pressing 500 pounds. You got to practice. You got to build up, right? Start with just a couple of 45 plates. Build it up to a couple of 25 plates on top of that, and make your way up there. Okay? You have to practice. Especially even if you are an experienced trader and you've gotten this far in the video and you're saying, hey, Faris, I know half the stuff you're talking about. I'm the man. I don't need this video. I beg to differ, right? I beg to differ, because there are even some days where I paper trade and I'll say, you know what? I'm not too comfortable with this trade, but I'm trying out a new strategy. I'm going to paper trade it, right? And because you are new, even if you are experienced, if you are new to the chat, you are new to our strategies. So if you've never traded with my strategies, why not practice them before you actually put real money on the line, right? I honestly think that if you join a chat and you immediately start trading with real money, you're pretty dumb, right? And again, this might insult some of you guys, but I've done the same thing, right? Where I've learned a new strategy and I really wanted to see it in action, so I traded with real money. Why not see it to believe it, right? Why not let me back up what I'm saying before you throw all the money at me? And start saying, hey, Faris knows this stuff. I'm going to take every single trade, right? Let me prove it to you. Prove it to yourself before you actually put real money on the line. Okay, test it out before you lose money. Okay. And the last thing is, folks, ask questions. For the love of God, please, please, please ask questions. I always go back to this story, but when I first started trading, I didn't know what a downtrend was. It sounds so simple, right? Faris, it's something that's trending downward, but I didn't know how it worked. I didn't know how these charts worked. I didn't know how stock options worked. So I just asked an annoying amount of questions. If you think you're bugging me, you're not. Trust me, I have dealt with worse. If you think, hey, I know Faris probably isn't up, but I'm going to email him here at 2 a.m. and see if he gets back to me. Do it, right? What have you got to lose? And the bottom line is, I don't get annoyed easily. I would rather you ask questions than just be a wallflower and not do anything, right? I want you to have a presence in the chat room. So whether it's via email, via Twitter, right? My Twitter handle is Trade with Tex. Whether it's not even me, it's Dennis or DCR or somebody else in chat. Ask the damn questions, okay? If I don't get back to you right away, it's not because I'm ignoring you. It's because I don't have time, and I will get back to it when I can, right? I will always make the effort to answer your question. And if I miss the question, ask it again. Okay. Now, the last part of this webinar is arguably the most important. I'm going to show you guys how to navigate to the chat room and to the Getting Started guide. Okay. So this is what the website looks like when you log in, and it might be different, a year from now or 2 years from now, but this is the layout we got right now. Getting Started guide right here. Who would have thought? It's called Getting Started. Click that. It'll help you set up your charts. Chat room right here. Click that. There is, and I'll show you in a second, but there's the audio and screen share up top, text chat down low. This is where you ask questions. This is where you watch and enjoy the show. Okay. New guys, you will have access to the video library. Trial members, since it's free, we do not give you access to this, but you do get the latest 2 webinars from Tuesdays and Thursdays right here. Okay? And they're usually about 15 to 30 minutes on average, typically 30, but some of them have been shorter lately. And if you're sweating at 2 a.m., you got a question, contact us. Okay, that goes directly to my personal email, not my business email, my personal one. Okay? And I'll show you guys what the chat room looks like right now. This is the platform we use at the moment. It's called ClickMeeting. You just put in your name and email, and it allows you to spectate the screen share and the audio. Okay? Audio, typically I'm on 15 minutes before 9 a.m. And then about 15 to 30 before the closing bell. And then down here we have the actual text chat room. And this is just a brief example, but you can see some of the things that were said in chat throughout the day. And if you have questions, you can actually click on my name here, and it'll say send a message for you. For me, it just says view profile, but for you, it'll say send message, and you can private message me, and then you type down below. Okay, that's what we're using actively. All right, so if you do have any questions right off the bat after this, you're saying, Faris, I want to take this one step further, email me, right? Email me. That's probably the best way to start up a thread and consistently talk. I know this was a long video. I know there's a lot more to get into. Your job in this chat as a Trade with Text member is to give 110%. Okay? I will give 100% if you give 110. Okay, that's the idea. So if you want to be a successful trader, don't, wake up late, not prep up your charts. Don't do nothing on the weekends, right? Look to do more. Always look to be improving. Always look to be the best trader that you can be, because I guarantee you, you probably realize this already, you got some tough competition. I'm your competition, right? You got to outtrade me. You got to outtrade the computers. You got to outtrade professional traders. And if you can't do that, you won't be able to make it. And you might be saying, well, how am I supposed to outtrade traders who've been doing this for 10 years? Everybody starts somewhere, right? That's why we say ask questions, ask questions, ask questions. So hopefully you guys enjoyed the video. I know it was a little bit long, but I've been meaning to do this for a while. Again, if you got questions, ask them, and enjoy the Trade with Text membership, right? Let's start banking together.